So let's get down to the truth. You think there is a deal and you load it up on call options going into tomorrow and next week. Guys, come on, seriously, there is no deal unless you're considering like Trump actually postponing the deal as a form of a deal. So, however, here's a simple strategy I wanted to share with you that have worked for us and our 13 Market Moves daily subscribers over the course of the last couple of weeks. It's called Deal, No Deal Dance on the Charts. It is so simple, anyone can do this. The simple dance on the charts. And if you don't know nothing about charts, this should make sense. So here's the pop and drop dance. We call it pop and drop. As you can see, the markets pop and they drop. They pop and they drop. Pop and drop, pop and drop. So for those of you that might have never shorted stocks or made money when things fall, this may not make a whole lot of sense. But this truly has been the easiest environment to take advantage of these crazy news headlines. Here's what I mean by that. Basically, anytime Trump tweets, "Oh, we have a deal. Looks like we have a deal." What happens to the market? It pops on the news that there is this hypothetical deal out there. So what you do, the moment he sends out the tweet and the market pops, what you do is you buy puts. And then the market shortly drops because there's really no deal. Then you get another tweet that says, "Hey, looks like they're coming. Looks like we're going to make the deal. Blah, blah, blah." No deal. The market bounces. "Hey, looks like, I got a letter from Chi. He wants to make a deal." Bullshit. Market drops again. Guys, just every time you get one of these tweets, all you had to do was buy puts when market pops and then sell the puts when market drops. So for those of you that are subscribers for the 13 Market Move day sequences, congratulations. You've taken advantage of this pretty well. I've talked to a bunch of you guys that made over 20, 30, 40K this week. So good job, guys. Now, for those of you that are trying to simplify things, guys, this market is not complicated. It doesn't get more simple than this. Just please understand a few simple factors about why there's actually no deal. There's going to be no deal. The only thing that you're going to hear is, "Well, we're still working on a deal. We decided to postpone a deal." But how do you trade this? Any further news about the deal until you really get something. Xi and Trump meet, they sign everything is in black and white. That is the deal. Until that happens, and the probability of that happening is like 5% in the next year. Okay, so there's 95% there's going to be no deal. But if you're considering that postponing the deal is a form of a deal, then I guess you can call it a deal. In reality, it is no deal. So here's just some easy things for you to consider. Historically, our country does not have a strong success record negotiating with communist countries. For example, former Soviet Union, Cuba, Vietnam. I mean, why should China be any different? I mean, the one simple aspect is this. Chinese are very proud people. So when you try to negotiate with them with threats and intimidation and demands, it is not an effective strategy in such context. So Chinese are dragging out time. Why have they not confronted the United States so far? Well, that is a strategy. They're actually taking the time and they're building trading relationships everywhere in the world at the speed that we have never seen before, particularly in Russia, Africa, India, Brazil, and so on. And also, it's quite simple. Trump is at a stalemate and he's losing control of this trade deal. Just think about it. If you really had a deal this week, would it really be necessary to put out extra threats about the 25% extra tariff just days before the long-awaited meeting? And the answer is clearly no. So the Trump tactics, unfortunately, have not been very effective. As many think that he is an effective negotiator, indeed it's quite the contrary. As he's trying to make America great again and bring it to self-sufficiency by bringing manufacturing jobs and so on, he's actually doing quite the contrary because he's using these two popular tactics, implementing sanctions and imposing tariffs. Now here's the outcome of this. It is actually forcing other countries to become self-sufficient. For example, Russia, who she plans multiple sanctions on, now is actually growing more wheat than ever and can feed its population for years ahead. So who's actually hurt? Well, United States farming industry is hurt because they're no longer able to export the wheat to Russia. Let's take a closer look into history. Remember the tariffs on Japanese cars in the 1980s? Well, they didn't last very long. As if you look in the history of tariffs in the United States, most of the tariffs in the last 100 years, they never really stayed for longer, right around 2-year time frame once they were implemented. So let's take a look at the Japanese cars in the 1980s, right? They ended up, what the Japanese ended up doing, they ended up focusing on making a better car. And that's how, even with the tariffs, they were still able to dominate the United States market and hurt the American auto production regardless of the tariffs. It's focusing on doing best, what you can do best, is what gets you the market share. And trying to stop that with tariffs over the course of the United States history has never been effective. Now, most of the products, for example, sold on Amazon are made in China. So let's take a look at this situation here that nobody's actually talking about. As a sole proprietor, somebody that runs a business on Amazon, and you're supporting your family with those sales, what do you think is going to happen if the cost of these goods was to increase 25%? Well, if you currently have created a lifestyle that depends on your sales from Amazon, and that can also apply to many people selling stuff online, because a lot of these goods, they are coming from China, so it doesn't necessarily have to be Amazon. But if you've created a lifestyle based on these sales, if your costs increase, all of a sudden you're not making that much. And the general rule of thumb, if the costs of goods that you're selling increases by 25%, the cost of everything has already been increasing, such as the cost of advertising on Facebook, for example, that a lot of smaller entrepreneurs use. The cost of everything has been going higher. So now if the cost of goods that you're selling online also goes higher, that substantially cuts into the margins. Well, for those especially selling on Amazon, the margins there are not very much at all. So if the cost of goods was also to increase, then many people that have been making money and supporting their family all of a sudden could find a situation where their income could be slashed in half. So what do you think is going to happen to their mortgage payment or credit card payment? How do you think that's going to impact their families? More importantly, as with the markets in general, there is a delay effect between the time this actually takes place and between the time it has an impact on other sectors, such as banking sector. And by the time this domino effect takes place, that's when the markets actually respond later down the road. So nobody's talking about it right now, but this is the root of all the issues that could be taking the market later down the road. Now, U.S. consumer, on top of everything, is so maxed out right now that even minor changes in the cost of living, the cost of doing business, will be enough pressure for consumer to crack, and delinquencies are going to start flying to the moon. Does that sound familiar? 2008? Anyone out there? Now, markets have two odd characteristics I've discovered over the years of trading. Number one is the delay effect that I have just described, right? So all the things that should be bringing the markets to its knees don't happen right away. They have a delay effect. And number two, market has a poor memory. An example of that would be how all of a sudden, all the analysts that were calling for the end of the world in December 2018, how they were going to say the markets were going to slash in 30-50% and so on. All of a sudden, 4 months later, they don't remember a thing about it. And these same analysts were calling for a complete apocalyptic crash are now talking about the fact that a few 100-point drop associated with all these failure of trade negotiations is actually an overreaction. So markets dropping 700,000 points multiple days in a row back in November, December was not an overreaction. But all of a sudden, us dropping a few 100 points in the last few days is an overreaction. Market has a very, very short memory, guys. And so the question is this: what are they going to say when markets will drop 1,000 points in the next 48 hours? Well, let's take a wild guess. Actually, it's too easy, guys. What are they going to say? They're going to say, buy the dip. Well, but hold on a second. They told you to buy the dip Monday, and the next day the market dropped. They told you to buy the dip Tuesday, and then the market dropped the next day. They told you to buy the dip Wednesday, and then the market dropped again. So I hope you get the point. So what do? Well, the answer is quite simple. Just as I showed you on the chart, represents the dance of deal no deal dance, of pops and drops. Just short every bounce. Short most heavily owned stocks by institutional investors. Because when everyone sells at the same time, those stocks will get hit the hardest. And yes, it does include some of the best stocks out there, for example, like Amazon. So when we look at the charts, for those of you unfamiliar about charts, you'd like to learn more, just click the links below, take our charts divergence pattern recognition course, okay? In many cases, we'll take a look at various charts, and there's going to be clear double top, like in the case with Amazon. We have increased sell volume in the last few days. We have poor relative strength, while the stock trades back to close to its all-time highs again. It's just shy of its highs. It was recently at 1950. The highest level in Amazon was 2,000, 2,050 bucks. And there's many other bearish signals like MACD. Finally, they're coming in and they actually distributing the shares rather than accumulating. So, when the banks are running for the exit in the next few days, it's going to be easy to assume that Amazon can easily drop, first of all, to this level 1809, second level 1754. So don't be surprised if you wake up tomorrow and Amazon shares are down 50 to 100 bucks. With that said, I wanted to point out, based on our proprietary 13 market moves formula, and some of you that try to follow it, the most important thing is to understand the sequences. So the last 5-day sequence is 1, 3, 3, 11, 11. For those of you that don't know how the 13 markets move formula works, guys, it actually combines chart patterns and probabilities. So when we look at a sequence like this, I'm not going to give you a ton of details about it, but it actually points to a further drop because we have a continuous behavior of institutional selling at the tops. We have continuous chart patterns that point that the further drop is in the making. If you'd like to learn more and use it, it is especially useful for anybody that is a swing trader. And if we take a look closer at the chart of S&P, I've been getting a lot of questions on this, so I'm not going to give you a ton of trades that you could be implementing. I just gave you kind of the general rule of thumb that you could use. But S&P 500 could easily drop 100 points in the next 48 hours. So we can easily target this level of about 28.11. There is a probability we could hit 27.75. And it shows the same pattern as you can see that I was just showing you with Amazon. So very simple, guys, nice and easy. I'm not going to bore you with too many details, but for those of you that are trying to learn more about the 13 markets move formula, just click the links below this video, get some extra information, get some free training, get some free bonuses that could help you get additional information and become a better trader. But more than anything, focus, trade this market with high level of intensity and focus. Understand some of the basics and try to read the charts between the line. If you're interested in learning how to do that, take action now so you can finish this year strong and make this year your best trading year ever. I'll catch you guys in the next video.